a person told me, he said that it's okay to fail. You just need to fail fast and then you need to win fast as well.
How much money do you make, Davie?
Like literally how much money?
How much money do you get in the bank per month?
Okay. Well,
I was not expecting you to answer this. Are you going to answer this? Hey everyone, welcome back to Accountants After Dark. My name is Sandon and I'm joined by the Director of Box Advisory Services, Davie Mach, for our second episode. Davie, how's things?
I'm great, man. I'm super bloody excited. And apparently people like watching this.
That's what we've heard so far. If you haven't checked out episode 1 yet, please do go and check that out. It's been great to kick off this new series with Davie. And if you do have any questions for Davie, you can leave a comment in the video or slide into his DMs. The whole purpose of this series is to ask Davie absolutely anything. We got a really unhinged question that I want to start with today, which one of our Instagram followers has asked. How much money do you make, Davie?
Like literally how much money?
How much money do you get in the bank per month?
Okay. Well,
I was not expecting you to answer this. Are you going to answer this?
Why not?
Oh my God.
Look, it's not like I'm making a crap load of money anyway, but there is two sides of it. Obviously, you're asking how much money I made, so I can tell you guys how much I paid myself. You know, a couple of years ago, I literally only paid myself under $100,000 a year. I didn't actually think I needed that much money. But it's only recently that now that the business is doing quite well and, you know, we've got quite a fair bit of employees and we can afford it now, I've actually bumped up my wages a bit. But I'm not really paying myself the market wage that I should really be paying. But so I pay myself about 160K annually. In terms of the business wise, like we've been like slowly, steadily, and the business has been doing really well. So in terms of money wise, in terms of like turnover of the business on a monthly basis, we bring in about 250K a month. So you can do the maths on how much we actually make a year. But super appreciative and proud of what we've done. Like we've been doing this for 6.5 years now, running this business, and we've been through tough times. We used to not make as much as what we're making right now on a monthly basis, and a lot of that money that we make also goes into for the growth of the company. So definitely the money that we make doesn't go into my pocket, and I see the company's bank account and my bank account completely separate.
You said that you could be making a lot more money elsewhere. So you're obviously taking a pay cut to give more money back to the business. I'm not sure if many people who are as successful as you are would do that. What sort of drives you to, you know, give back more to the business than taking home more than what you maybe could get somewhere else?
Well, I think it's partly because of the long-term growth, right? I'm thinking long-term goals. And in order to grow the business and keep a steady growth, so you got to look after the assets of the company. And right now, the assets of the company is the employees. When I first built this business, and a lot of people know already, I built this business to look after my family. I feel like I've kind of achieved that and probably on the road to getting to that point one day. But I feel like by doing that, I've picked up so many family members, which are my employees, and I want to keep going on this ride and journey with them. And in order to do that, we need to grow this company because one, they need to start families, they need to pay for a mortgage, they need to invest their money, they need to live their life as well. And in Australia, unfortunately, it's a great country, but it costs a lot of money to survive here. And if I don't continuously grow this company and reinvest back into the company, these people will leave us. Sure, I can make a lot of money in the short term, but then the staff members that helped me build this business won't be there to support me. So I just decided to myself that maybe let's go for the long-term approach. I don't know if this is the right approach, which is keep our staff members happy, pay rises every single year, you know, make sure that it's higher than inflation, of course, and ensure that there's a career growth for them. And that means I need to reinvest money back into the business. I need to, you know, sometimes take a pay cut, sometimes not pay myself the market wage, but I am benefiting because the business grows, and also I'm still getting a wage, a substantial wage. It's not like it's a small amount. 160K is a lot of money, to be honest. But then I also ensure that the staff get paid well, but the business grows. So I'm still benefiting. The funny thing is, tax is a lot cheaper when you sell your business than actually the money that you make on your salary. Weird thing, hey, if you sell your business, you can pay up to about 25% in taxes. But if you earn an income, you pay about 45%. There's a big difference in taxes. So I'm starting to realize that selling a business is better than actually, you know, making money on an annual basis, because when you sell the business, you pay a lower tax because of the CGT discount, 50% discount, and sometimes even more. You can actually reduce your taxes to 0% when you sell your business. There are ways to do that. And if you don't know, watch the videos.
We had a question which I'm quite curious about, I think from one of your younger followers. How do you actually deal with failure? Because not everything's been smooth sailing since I've joined.
Yeah, I am surprised that you think that I've been positive throughout the whole journey. I actually feel like the last 3 months I've been up and down all the time.
You have, but I feel like you've handled it a lot better than I'd assume most people would.
That's good. That's good to hear. It's never always been like that. I'm a young entrepreneur, young boss, especially for accounting. And I feel like I'm still trying to learn how to manage my emotions. Vin, one of my mentors, says to me all the time is that when he goes on stage, because he's a presenter and communication coach, he's always nervous and he's always feeling like he's not good enough. However, how he gets himself out of this is that he tells himself and tries to change his mindset that he's doing this for the people that are watching him, his audience. And I think the same thing applies to business. You're doing this for the people you love, or for the staff members, or for your empire or for your family. And as a result of that, you got to understand that you got to move on from the failures, and you got to not let that impact you too much. Because if it impacts you way too much, you're going to stuff up on a lot of decisions in your business, and you're going to be really scared, and you're not going to be able to make the right decisions, or you're going to make them too slow. And as a result of that, the business could fail. A person told me, he said that it's okay to fail. You just need to fail fast, and then you need to win fast as well. Yeah, so fail fast so you can win faster.
I want to pivot into something that I think a lot of viewers can kind of connect to. And that's what's been happening in current affairs and the news. Accountants have been making the headlines, but not for the right reasons. You've seen PwC and KPMG over the last few months come out with lots of scandals based on unethical and immoral behavior when it comes to how they deal with their tax practices and accounting business. How do you go about navigating and building trust with your clients, especially when people have such a bad image about accountants?
Yeah. Do you know what's weird? CEO of Xero, I think it was, he had a conference this year, and he said that accountants, his main subject that came out of his talk was that he said that accountants have a bad rep, and we need to change the way people perceive accountants. And I think that speaks wonders. Like the CEO of accounting software, and one of the major accounting softwares in the world, have said that that's probably because of the things that are happening on the news. And accountants are seen as people that are highly respected, they're very professional, and they're supposed to do the right thing. And unfortunately, there are people out there, some bad eggs in the basket, that have caused a lot of bad image issues and reputation for us. And so we need to improve that. And for me, no matter what industry you go to, no matter what you do in life, it's a dog-eat-dog world out there. And there's always going to be people that are going to try to ruin the reputation, or scam people, or do things for their own self-benefit and not helping others. And I see it today. I'm always fixing problems. I've realized that in order for accountants to do better, is they got to be personable. They've got to admit when they've made mistakes, because people do make mistakes. And the funny thing is that clients will remember you for your good service, but they will not forget you when you make a mistake. However, there's one last thing about this, is that when you do make a mistake and you accept it and you apologize and you improve from it, they'll remember you for a lifetime. And I've found clients that we have made mistakes before, and we've owned up to the mistakes and tried to fix it and do whatever we can to help the client. The clients have just said, I already knew you're a good accountant. However, because of the fact that you owned up to your mistakes and you're trying to fix it and you're trying to improve, I feel like you're being very honest, rather than trying to lie about it. You could have just lied, because you're an accountant. We have to trust what you're saying anyway. But I was completely honest and just said to him that we made a mistake. So that's what I think a lot of the accountants should be doing. Not just this industry, actually, like a lot of other industries as well.
And something else that you mentioned in the last question was about the challenges that the industry is facing. We actually had someone comment on one of your YouTube videos. I'm trying to pick my major in university, but I'm hearing more and more about accountants having a high turnover rate. What's turning people off?
Whoa, that question there is something that I'm trying to fix. And the biggest issue about accounting is that you go to uni and you study in high school, and then you go to uni and you study, and then you have to go and get your diploma. And getting a diploma is like your chartered accounting certificate or your CPA certificate. That's a lot of studying. And on top of that, you're getting paid, close to minimum rates, like you're making anywhere between 50K to 65K. That's the going rate when you first graduate out of high school. And on top of that, you still got to study. And then you got to pay for your new course, which is chartered accounting practice. That there is a lot of money, and it's taken so long to make the money. And unfortunately, I think the process set out for us is too long, and we need to shorten it. And that's the biggest issue, because the economy is created in a way where right now inflation's going sky high, and the standard of living is increasing so fast. And the biggest problem about accounting industry back then, it was really good because the pay was amazing. However, the increasing prices is increasing too fast compared to your wage increase. And I think that's the part that's turning a lot of people off. They're finding that the career growth is too slow and too long, and people aren't patient anymore. That's one thing. I think the second problem is that the younger generation, the Gen Zs, have a dilemma. Back then, owning a property, starting a family is the strange dream. However, people are finding it harder and harder to start a family and own a property. And it's partly because all the policies. I'm not blaming anyone, I'm not blaming the government, but it's just the old school way of mentality of creating this type of policy with interest rates and investments in property, investment properties, and negative gearing, all that stuff, has created a vicious cycle, which I don't think is benefiting the younger generation, where prices are rising significantly, and it's harder and harder for the younger generation to find a career and work in a career for 10 to 15 to 20 plus years and still come out of it being able to retire one day. Like, you can't retire on a salary you can't even buy a property, let alone start a family with the salary that we're making right now. And so by the time that they actually have enough money to save up for a deposit, I think you're like 40, and then when are you gonna have a kid? And that's the problem. I think that's why a lot of people are not wanting to jump into the accounting industry, and we got to fix that. I don't know how I'm fixing it, and I'm actually trying to increase our wages as much as we can, but I still don't feel like we can do this. The only way we can do this is if the government steps in and someone says that we got to do something about the way we're treating negative gearing investment properties and the rise in house prices as well as inflation. So if we don't fix that, I really don't know what's going to happen in the accounting industry. A lot of people are retiring from the accounting industry, and we're not getting the quality of educated accountants as what we used to have. And there's such a low supply of accountants right now, and every accounting firm is struggling to hire. So we're actually pushing people back. We can't even service the clients that we can. So it's a whirlwind of problems that we're going to face. It's going to get worse if something doesn't happen. Another thing that's a problem is that we're following this book that was written, I feel like 50 plus years ago with accounting, is that we, do timesheets, we, charge clients after the work is done, we speak to clients once every year. This book has been written years ago when technology wasn't there. Technology is not even caught up, has far surpassed how accounting should be done. And unfortunately, we're still following the way that how accountants used to do it. And it's because we've got old school accountants still doing their way of doing things back in the day. And we've got all these new, younger generation accountants coming in with new technology, faster ways of doing things, but they're not understanding why we have to do it so inefficiently. Even like with Box, like we're trying to be the new age accountants, but there are things that we're doing that we just don't understand why we're doing it. And the reason why we have to do it is because we live in a society right now with the Australian Taxation Office, with the Australian Securities Investment Commission. They're still very old school. So we have to do it old school just to service their processes and their systems. They're trying to bring in all the new technology, but there's just so much to do and fix because it's such a big organization. I have high hopes for accounting. There are a significant amount of accountants, the old school generation, retiring right now because the changes, the laws, the legislations are constantly changing recently. It's never been that many changes I've ever seen. I've been in accounting in 16 years now. So as a result, a lot of people are retiring, and then the new age accountants are going to come in. Accountants one day will become fun again and, be the sought after career that hopefully people want to go into.
Someone wrote in with a question about negative gearing. I think negative gearing is a concept that maybe younger people aren't really grappling with because it's not something they have to think about, having to purchase their first home later in life than maybe the generation before. Could you explain what negative gearing is and how that might impact taxes?
But the way negative gearing works is that basically you own a property and you're renting out, and it's considered investment property. And the tax office in Australia treats rental income and expenses as quite similar income as your wages. So you're able to offset the loss if you're making a loss in your rental profit. So say you rent it out and all the expenses that you pay ends up becoming a loss. You get to offset that loss against your wages. And as a result of that, your taxable income goes down. And so you sometimes get a tax refund or you pay less tax. So negative gearing has been great for a lot of high income earners and individuals because they make so much money and they pay 45, 47% taxes in Australia. But then when they buy a property, rent it out, and they make a loss, they get to offset that loss against their tax return and get a refund or lower their taxes. In the end, they're losing money, but it's beneficial because they see that the property prices are increasing every single year. And because the property prices increase over 5 to 10 years, it may double in value. And so therefore, even though it's doubled in value, you don't need to pay taxes on that because you can refinance that money back out.
Because you got a bigger loss.
Or no, because the value of the property's gone up. So you can refinance from the bank that money out. You don't pay tax on the profits because your property's gone up. You haven't sold the property, but you also pay less taxes because you're actually making that loss in your rental losses. I hope that makes sense. I hope I explained it well.
So basically, just to check my understanding of it, if you have a property and if you can make a loss based on the rental income and the revenue that you're getting in, then you can offset that in your taxes.
Yeah, offset against your salaries, and then as a result, offset against your taxes. Yeah.
Right.
However, the property still goes up in value. Why the hell would people ever want to make a loss in their property? But there is a second option where the value of the property goes up in value, but you never sell. Most people don't, and as a result, that increase in value usually dwarfs the loss that you're making per year. And you don't ever sell, so you don't ever need to pay the tax on the property increase. And then what you do instead to access that cash is to refinance out the property.
Got you.
Yeah, so you go to the bank and you say to the bank, hey, my value of my property is going up. So technically you could lend me more as long as your income goes up and the property value goes up and you got a good credit rating. The banks will be like, okay, we'll lend you more then now. And so they lend you the money, but that money is a loan. Technically it's not income. So the tax office can't tax that loan. And as a result, you get all this tax-free income, really, so you can spend on this property value increase that you've had.
I want to wrap up by asking a little bit more of a lighthearted question. We've spoken a little bit about some of the challenges that Australians are facing in today's economy. What's something that people can claim on tax that they wouldn't expect to be able to claim on tax?
My favorite tax deduction that I tell clients is that most clients, when they run a business or, the high income earner, is they like to buy fancy bags, pens to, go to work with because it makes them look cool, makes them feel good, makes them feel rich. And as a result, it helps them with their promotions or helps them with their business in their image. The funny thing is that people don't actually know that you could buy luxury goods such as an LV bag or, a Mont Blanc pen. Hopefully I'm getting sponsored one day. But you can buy those expensive goods as long as you use it for work and you can prove that you use it for work. So I'm not into those fancy bags or pens and stuff like that. However, I've seen clients that are into that and they purchase those, like a work bag, for example, from LV. They can use that for work and they mainly do use it for work because that's where they keep their laptops, their files, their documents. That stuff there, no matter how much you spend, technically it's tax deductible. So there is a case law that went all the way to the courts where the tax office tried to disallow the tax deduction on a Mont Blanc pen, I think it was. It was a very expensive pen. But the judge said to the ATO is that you're here to determine if it's tax deductible, not to tell the taxpayer how much to spend on a tax deduction. So technically, as long as you can prove that it's used for work, those work items like laptop bags or handbag that's used for work or a pen used to write for work is tax deductible.
Right. What are the rules we need to keep in mind? Because I obviously can't go out and buy a PS5 and then say that I'm using it for work as a stress relief thing, right?
Yeah. Yeah, well, the PS5 is a personal item to, help you personally rather than actually help the business. Yeah, I know helping you would then result to helping the business. However, the tax office says that it has to be linked to the income. So you signing papers, for example, that would result to you for a client, I'm signing papers. As a result, it's tax advice. Client, I get to charge that to the client. Technically, that pen is tax deductible. I bought a handbag or a work bag that's used to carry the laptop, which then I can do my work, is tax deductible. So they are the things that you can claim. So I guess the tax office rule is there's a link to the actual source of the income. As long as it impacts the source of income, then you can claim it. So for example, this laptop that you have here probably costs you $4,000 or whatever it is. That there would allow you to do your job. And as a result, you'll get paid. And so therefore it's tax deductible. However, the PS5 won't allow you to do your job or just make you feel better. That's different.
Yeah, just for the record, this laptop did not cost $4,000. Davey would need to pay me a lot more than that to be able to afford a $4,000 laptop. So it was a lot cheaper than what he thinks it was. But I think that's a really great place to wrap it up, Davey. Thanks so much for watching, everyone. We had a blast on episode 2. As always, like, comment, and subscribe, and let us know if you have any questions for Davey, whether it be technical, opinions, or personal stories.
And do not ask me questions about how much I make anymore, please.
We'll see you next time.
See you guys.
Just keep on.